Gerald Celente is looking at the moment. Market's a little bit wobbly. Next week in the US, you've got the interest rates be at 25 basis. I want to give you to give us a view. First of all, what are the areas that you think people should be looking at?
Well, Canada just raised their interest rates, central bank, 25 basis points. I guess on the streets, they're only going to raise it 25 basis points. If they raise it 25 basis points, we're forecasting gold is going to skyrocket way above $2,000 an ounce. Because that means they're putting more cheap money in there. They want to keep it going. If they raise it 50 basis points, gold prices are going to go down, and so are the markets, and so is the global economy. Gold's going to go down, but only for a short time, because it's going to be an economic disaster. They're money junkies. They need their monetary method down. Kennedy, he said, you don't have a clue what's going on, and neither do the American people, because if they did, there'd be a revolution in this country. He was also the Treasury Secretary under Richard Nixon that took us off the gold standard. Going back to service sector economy, Bill Clinton and Al Gore, we're going to get rid of them dirty manufacturing jobs. I'm going back to Ross Perot. The next, him talking about what would happen if we went into NAFTA. All the jobs were sent out there. Everything was lost. I'm in New York, upstate New York. There were manufacturing places. All gone. The market should have crashed when the COVID war happened. But governments pumped in all of this fake money. They brought interest rates to zero and negative. They were negative. They've been negative in Europe, since for 9 years. And it kept them down there as inflation's going up, and they're saying it's only temporary and transitory.
Central banks bought records amount of gold in the third quarter of 2022, numbers we haven't seen in decades. We still don't know what China's buying, but they revealed that they're buying some. No one really believes the numbers. That's a different story. What do central banks know that we don't know?
What they know is how they're going to rig it, and we don't know when they're going to do it and how they're going to do it. But again, as I was saying, why would you keep your money in a bank when they're not paying you anything and they're making money on your money? To us, gold is the number one safe haven asset. When gold went down into the 1600s a few months ago, we said this is the bottom, it's going up from now. And now it's been hitting, several month highs. Again, when they go digital, gold is going to go through the roof, because that's going to be the only real currency that's going to be accepted to pay, to transfer, because they're going to do away with all the paper money. Again, the whole world has gone AI. It's a whole different world. And you know what the biggest news now that's being watched is TikTok. That's not news. That's like beep, beep, bop, bop, bop. That's where it's all going. And so what we're saying is to protect yourself. This is a story. I want to get this straight to everybody listening. Go back to 2018. When the markets crash in December, it's not a good sign. The clown playing president at the time, who the only thing that he did, that he promised to do, was to lower taxes for the bigs, the private equity groups, and himself, Trump, put deep pressure on Powell, Jerome Powell, the Fed head, to lower interest rates because the economy was going down big in the stock markets. Gold lost $22 because it's estimated that they're going to raise interest rates, dollar gets stronger, and when your currencies are going down around the world, it costs you more to buy commodities like gold and oil. So, but I'm still very bullish on gold. And to me, gold, and I don't give financial advice. There are no advertisers in the Trends Journal. And by the way, again, but going back to gold, I'm very bullish on it. When the crash happens, gold price is going to skyrocket. And again, to me, they're artificially being pushed down. My first buy of gold was $186 and change an ounce. I started playing the oil and gold futures. People weren't playing them back then. And I put a $5,000 bet. I turned it into almost $750,000. So what I'm saying, the whole world is going AI.
Yeah.
The younger generations are going to accept it like that. The digital currencies. That's perfect for me. It's perfect for you. And China's going to lead the way in it. It's going to be tough. I think there'll be a place for Bitcoin. And very interesting with Bitcoin, even though it's way down from when it was 60,000, it's still at 16,000. And when you go back, 11 years ago, it started at 0. And it's been in the $16,000 range now for months. It hasn't gone down from there. The only thing that I think it's going to stop it is when they come out with digital. And this is what we said going back to 2020, when our magazine cover was from dirty cash to digital trash. When the governments when they go fully digital, they're not going to want any competition. And they're going to make it very hard for it. That's the only way we see it going down. But we still see Bitcoin, as all the cryptocurrencies, as the one that's going to stabilize until they do that and it becomes the real deal. And it's going to take a few years for that to happen. It's going to start gradually, and then all of a sudden it'll end and we'll all be digital. I remember back in the 70s when all this started to happen. And then it got a lot worse because of Bill Clinton, with NAFTA, our jobs leaving America, going to poor labor countries. Don't have to pay a lot to get stuff made. And then bringing China into the World Trade Organization. Biden part of it. So the trade deficits are ridiculous. The debt levels over $31 trillion in the United States. And again, what's going to happen when they raise interest rates, gold prices will probably go down, but so too will foreign currencies. And the emerging markets borrow their money in dollars. So as their currencies go lower, they have to pay more. So there's going to see a lot of serious civil unrest going on. Now, anything on variable rates goes way up. Oh, and the $31 trillion debt the United States, now you got to pay more debt on that. And then you look at the emerging markets. The dollar goes up when interest rates go up. They got to pay more money. Their currencies go down, they got to pay a lot more dough. So again, taking a globalnomic perspective, now you're going to start seeing people taking to the streets and protest the lack of basic living standards.